Hey everybody, welcome to the Head Startup. On today's video, I'm going to talk to you about leverage shares. So what I'm going to do is I'm going to explain basically what they are. I'm going to explain what scenarios you can use them in, and then I'm going to go through a real life example on Trading 212 and show you where you can find all the relevant information that you need to do when you are researching buying any leverage shares. So leverage shares are exchange traded products, or ETPs for short, and they're created for most popular stocks. So you'll see ones for the likes of Apple, the likes of Tesla, Microsoft. There's all of these exchange traded products created around these kind of popular stocks. So to explain what they are, I'm going to have a look at Microsoft on Trading 212 and have a look at the leverage share options that you have on that platform. Okay, so now I've gone on to Trading 212 and I've searched for all of the leverage shares for Microsoft, and it's given this list here. So as you can see, there's a good few to choose from. So as you can see, the different names here. We have Microsoft -1x, we have Microsoft 2x, and we have Microsoft 3x. So what does this mean? Basically, these products are set up to track the daily price of Microsoft. So if the daily price of Microsoft goes up by 2%, as it did on the day that I was recording this, then the Microsoft 2x leverage shares should go up double what that was. That's what the 2x stands for. It's a multiple of 2 of the daily price of Microsoft. So as I was saying, the Microsoft share price went up by about 2% roughly, and this 2x leverage shares went up by double that almost, of about 4.5%. And that's the same then for 3x. So the 3x Microsoft leverage shares will go up 3 times whatever the daily price is of Microsoft. So the daily price went up by roughly around 2%, and the 3x Microsoft leverage shares went up by 6%. And then as you can see, the first option on the list here is the -1x. So what happens there is if the price goes up by 2%, then this leverage shares will go down by 2% and vice versa. Let's say for the 2x and 3x Microsoft leverage shares here, if the Microsoft share price actually went down by 2% instead of up like it did today, then these will also double your loss and it will triple your loss depending on which one you have here. That's basically the principle of how these leverage shares work. But now I want to talk to you in a little bit more detail on just exactly what you need to know if you ever plan on actually using these. So if you ever do decide to use one of these leverage shares, ETPs, it's important to do a bit of research on the product itself. And now I'm going to show you quickly how you can find a document that will give you a good summary of everything you need to know. So I've just clicked into the 2x Microsoft ETP that we were looking at there a second ago, and now I am just going to go down and scroll here through the information, and what I want to find is this ISIN. So the ISIN is basically an identifier for the product. So I'm just going to copy that and throw it into Google. So pretty much always the first result on Google will be the company that is actually issuing this product. So Leverage Shares is the company that issues this 2x Microsoft ETP. So the first thing that they have on the website here is just a little description about the product as well. So I'll go through exactly what I was talking about there again. So if Microsoft rises by 1% over a day, then the ETP will rise by 2%, excluding fees. However, Microsoft falls by 1%, then the ETP will fall by 2%, excluding fees. So that's just a nice little summary again of what it is. But what I really want to show you basically is how to find the key information document. So there should be a key information document, which is a 2-page summary that will give you all the details you need to know, and it should be available on this website. So I'll scroll down to the bottom here. So down at the bottom of the page, they have this key information document. So let's open up that and have a look at it. Okay, so here is this key information document, and this goes through everything that you need to know in a summarized fashion. So it'll have the issuer, the regulator, etc. It also has a summary of how it works here as well. So if you want to read about how they actually achieve this leverage of 2x for this Microsoft product, they have a bit of description of how they do it here. But what I really want to focus on here is just this paragraph here. Holding the ETP securities for more than one day is likely to result in a return that is different to 2 times the return of the reference asset over the holding period. The difference is called the compounding effect. It is caused by the product's daily leverage rebalancing and is magnified by more leverage and longer holding periods. Compounding may have a positive or negative impact on the product's returns, but tends to have a negative impact the higher the volatility of the reference asset. So essentially what this is saying is these products are just designed to hold for one day and one day only. If you hold them for more than one day, the return won't match the 2x that it is set out to do, because at the end of every day they need to rebalance the leverage that they have in the product, and this will affect the returns. So this is an important point to remember. So these are only designed to hold for one day. The next important thing obviously everybody needs to know is how much could you potentially lose if you invest in one of these leveraged shares. So the leveraged shares are similar to your regular stock. The most you can actually lose is just the amount that you have invested. So it's pretty similar in that way, but it's just more volatile. So the rest of the document pretty much just goes through the different kind of risks and stuff like that. The other important things you need to know here are what are the costs associated with buying one of these ETP products. So the fees are actually pretty low. So they have an example here. So if you invested 10,000 for one day, it would only cost you 71 cents in US dollars, and that is 1.78% over a whole year. So it's quite low in terms of your fees. So further down the document, again, they reiterate that it's only meant to be held for one day. So they have here their recommended minimum holding period, one day. And so that is, again, one thing that you really need to remember. So you might be thinking to yourself now, what is the whole point of holding one of these for one day? How is that useful? So I am going to talk you through some examples of where this might be of particular use to you in the future. Okay, so here are some common uses for the leveraged shares. So the first one here is responding to technical indicators on particular individual stocks. So this is particularly for day traders. Say if they're analyzing the trends on the charts and they are recognizing a breakout in a certain direction, then they might use one of these to take advantage of what they believe is going to happen, to double or treble what they want to make. The next one is trading the volatility and directionality of individual stocks. That speaks for itself. The next one then is positioning or responding to earnings and news announcements. This is probably one of the most popular ones. So generally when there's earnings or news updates, there's a spike in a bit of volatility, and if you are ahead of the market and you believe you know what direction the stock is going to go, then a leveraged share might be useful for you to take advantage of this. And then the last two that they have here is reacting to overnight movements in foreign markets, which may carry momentum into the home markets. So that's kind of a common one that is also used because the US market is not open till about 2:30 in European time. So you have a chance to see how the stocks have been trading in Asia and in Europe, and then you can have an idea of what might happen when the stock market opens in the US. So it's a good way to take advantage of that. And the last one they have here is hedging existing exposures in a portfolio. So if you're making a particularly risky trade on a day and you want to cover yourself off a bit, you might want to buy a leverage share going in the opposite direction so you don't completely lose your shirt if everything goes wrong. So that's basically all I want to talk about today, and I hope you enjoyed the video, and if you did, I would really appreciate it if you hit the like button and subscribe to my channel for more content like this.